Hello traders, this is the Zigzag Man, and this is part 3 of the lesson on support or resistance at the middle Bollinger Band. Now let me clarify this point right away. If the stock rises up through the middle Bollinger Band, chances most of the time are that it will go all the way up to the upper Bollinger Band. The same thing here. When the stock falls through or below the dotted blue line, the middle Bollinger Band, most of the time it will head towards the lower. Same thing here. On the rise again, it blows right through it, goes up to the upper Bollinger Band. Now we get into the interesting part. The middle Bollinger Band can also provide a level of support where after a really sharp rise, nothing goes up forever. It goes sideways with a slight downtrend for a few days. That looks like almost 2 weeks, 10 days, and bounces up off of the middle Bollinger Band area. And as you can see, not one of these days, not one of these closed below the middle Bollinger Band. Now, when the stock falls towards the lower Bollinger Band and bounces, the CCI will always be bouncing at the 0 line, and stochastics will be bouncing at the 50 line. And you'll usually get an MACD crossover where the histogram was negative and goes positive, and the fast line drops below the slow line and then crosses back up through it. But let's go back to the first two examples here. Okay. First of all, when a stock rises through the middle Bollinger Band, there was a little bit of a hesitation here at the 50 line and at just above the 0 line of the CCI, but then it pulled back and broke back out. So if you missed my perfect entry below the lower Bollinger Band, you can still get in when the CCI pulls back to the 0 line and bounces, and stochastics breaks above the 50 line. See right here, he pulled back below the 0 line and then broke out of this area of resistance and was on his way. Now here's a better example about when it goes up and does not show any resistance at the 50 line of stochastics or the 0 line of the Bollinger, the CCI. Okay, as I always teach, I like to buy after a real sharp pullback when he hits the lower Bollinger Band. Usually volume increases like it did on that day right there. You get the perfect CCI buy signal when it falls below minus 100 and crosses back up through it. That would have been right about here. Okay, but after such a sharp vertical sell-off, I like to buy as soon as the CCI starts turning up again, especially when stochastics is so far below the 20 line, does a little tiny double bottom shaped like a W and breaks above that area of resistance. Anyway, you're in here. That's at about $6.50 or $7. It looks like in 2 weeks he goes up to $9.50. With 1,000 shares, you just made $3,000 in just about 3 weeks here. Okay. Now, if you have a margin account, you could short sell him right here on the sell signal. I don't have the 5 MA up here because I didn't want to confuse you, but there was a double top where it goes up, down, up. The second high wasn't quite as high as the first, and then it broke the neckline, which was this level of resistance, support, and it would have been breaking below the 5 MA right at that period. So if you had a margin account, you could have shorted him when he closed below this day right here, because as you can see, he might have found support right here at the middle Bollinger Band, but as you could tell, you would have stayed in this trade as he broke through or below the middle Bollinger Band, knowing that it would most likely head on down to the lower one. And your signal right here on the CCI was there was no stalling, no chance of a bounce at the 0 line, and stochastics just fell like a rock without ever having an uptick in the 50 area. Okay, your MACD sell signal also happened right around at the same time. Okay, so here was the buy. You knew it was going to go up to the upper Bollinger Band because it closed above the middle Bollinger Band. Okay, it went vertical, two straight up and down outside of the upper Bollinger Band with a perfect doji, a little tiny body with an upper and lower wick of equal lengths. Okay, so on a vertical move like that, you want to sell as soon as the CCI starts turning down. And you could, like I said, you could go short there. Okay, on this, the perfect buy was on this doji. Do you see that red candlestick with a tiny red body and a long lower and an equal length upper wick? That was the signal he was bottoming. Usually there's a little bit higher volume on a bottom, but the volume came in on the buy side right there. Okay, so you wait for your, because that was a vertical fall straight up and down, you buy as soon as the CCI starts to uptick. It's confirmed when it crosses up through the minus 100 line. It's also confirmed when stochastics dips below the 20, the fast line crosses up through the slow line and gets above 20. Okay, and here's your perfect, an amazingly perfect triple MACD crossover, which came a little late. That came as the stochastics was breaking up through 50, CCI was breaking up through 0, and that's where you get these perfect MACD crossovers, which means you could actually enter on the MACD crossover if you miss the bottom, because he's breaking up through the middle Bollinger Band. And when they break up through the middle Bollinger Band, they usually go to the upper Bollinger Band. And then, because this was such a sharp vertical move again, you could have taken profits right in this area. He still went up a day or two later, but you would have been right to take profits, or you could have waited for the actual CCI sell signal. Okay, but then here's the important part. He comes down, hits support at the middle Bollinger Band, support at the 0 line of the CCI, support at the 50 line of stochastics. The MACD never got close to 0. It was still well above it, and then it dipped below. The fast line dipped below and then crossed back up through the fast line, or through the slow line. Okay, so you're thinking, okay, well, maybe I sold here. Hey, look, he's bouncing. Get back in. He's bouncing at the 0. He's bouncing at the 50. He's giving another MACD double. There's one on the fast and slow line, and then he's giving another buy signal with a histogram. Okay, so once he starts finding support at the 50 line, when the Bollinger Bands are pinching, there's a real good chance he's going to do it again. But here we go. Two vertical. In 3 days, he goes from 950 to almost 1150. That's 3 days. Huge volume. Volume's increasing. That's another sign that you want to stay in when he hits the middle Bollinger Band. You got volume increasing. Then this huge volume day comes in. Okay. Now, you could have taken profits there and waited for a pullback, because you know, just like this, when it goes too far too fast, it's either got to move sideways or slightly down. Over here, pretty much the same thing. Too far too fast. Outside of the upper Bollinger Band. This time it's a sharper pullback, but he finds support at the middle Bollinger Band again. So on this one, here you go again. You can get in again when he finds support at the middle Bollinger Band as the CCI bounces up off of 0, as stochastics drops almost to 50 and bounces again. Okay? Now, the MACD didn't do a whole lot that time. Okay, so now we're looking at losing support at the middle Bollinger Band. Okay. Now, first of all, I always teach to take profits on the blow-off top volume day. This candle here of volume is bigger than anything you see for the last 3 months. Okay. When it forms a shooting star, which is a tiny black body, there is just a itty-bitty lower wick, but that really doesn't count because the upper wick is 3 or 4 times as big as the body. It's also at the upper Bollinger Band. You've got blow-off top volume. Highs and lows, or reversal points at highs or lows, are usually found with extremely high volume. Okay, so here he goes. You should have taken profits that day, but you're waiting to see if he's going to hold support at the middle Bollinger Band for the 3rd time. Okay, he doesn't. This day right here. Okay, and I'll show you why. Because the CCI drops below 0 for the first time since back here, right here. Okay, so he had support. He blew up through it. He bounced up off of 0. He bounced up off of 0, but this time he blew it. He dropped below 0. At the same time, stochastics is dropping below these 2 levels of support here at the 50 line. The MACD histogram was warning you from this area right here that it was down ticking. Okay, so now as soon as he crosses down through the middle Bollinger Band, he hits the lower Bollinger Band like he's supposed to, but the MACD histogram is still down ticking. So you don't want to get in when as soon as he hits the lower Bollinger Band, because where's the buy signal? There is none. CCI is still going down. Stochastics weren't even oversold yet, still going down. Then it dips below 20. Now we're getting ready to buy again. Okay. Now volume starts to increase right in this area, a lot higher than where it was right here during the fall. There was no huge volume except for maybe that candle. It's not huge, but it's higher than many previous days. That red candle right there. Okay, so you know he's trying to bottom because the MACD histogram starts turning up well below before the fast line does. Okay, so you're looking for your buy signals. Okay, you're looking for big green volume, which came about this day. There's some better ones right here. Okay, so let's say you entered just on the normal CCI buy signal, even though that was a very sharp sell-off. Not as sharp as that one, or that one was pretty steep too, but it's also a pretty decent, but it never went totally vertical. Okay, now you could have bought as soon as the CCI started to uptick and then added doubled your position on the CCI, normal CCI buy signal, when stochastics has dropped below 20 and rises above it with the fast line crossing up through the slow line. Okay, the MACD histogram is going to give you, and the fast and slow line are going to give you the last warning buy signal when the share price, the candlesticks, are closing above the middle Bollinger Band, the CCI is breaking above 0, and stochastics is breaking above 50. So you can buy as soon as the CCI starts to uptick because of a vertical sell-off. You can buy on the normal CCI buy signal when stochastics is breaking above 20, even though you don't have the MACD crossover yet. The MACD histogram is giving you early warning that it's going to go. Or if you want to be sure, what this chart pattern is called a double bottom. It falls, it goes up to the midpoint of the W. A double bottom is W shaped. It falls to the second low. Okay, then it breaks, finally it breaks above the middle Bollinger Band area. Now a lot of people like to buy on the second low. Okay, this would have been frustrating because you would have bought, and for about a week or two he pretty much ran flat. Okay, so you're sure it's going to happen when the CCI breaks above 0, Stochastics breaks above 50, and you've got the double perfect MACD crossover where the fast line and slow line drop well below zero. The fast line crosses up through the slow line, and the MACD histogram, the blue part here, does a perfect crossover from negative to positive territory at the exact moment the MACD histogram crosses over. And that is when he is breaking above the middle Bollinger Band, the CCI is breaking above zero, and stochastics is breaking above 50. So basically there's 3 entry points you could have. You could try to call the bottom, try to catch a falling knife here when the CCI starts to uptick, even though stochastics hadn't given the buy signal yet. You can wait for the actual buy signal of the CCI and stochastics, even though the MACD hasn't given one yet. Or you can wait for him to clear above the middle Bollinger Band, which sat at about 950. You would have gotten 50 cents out of that. With 1,000 shares, that would have been worth $500. Okay? So let's say you got in when he cleared the middle Bollinger Band. That's between 950 and 10. He runs all the way up to $12. Okay? Now he hit the upper Bollinger Band, but there were no sell signals. The CCI didn't even come close to dropping down to zero at this point, or plus 100 at this point. And look at stochastics, it's just going up, up, up. Look at MACD histogram, the MACD fast and slow line, up, 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 up. So you wouldn't want to sell right away here, even though this red candlestick is a shooting star, okay? Because he's above the 5 MA the whole time. Okay, he did not close. Once he hit the upper, actually once he took off here from about 925, he never got below, he never closed or even probably touched the 5 MA, which is not shown here. I told you that because I didn't want to confuse you with the middle Bollinger Band. And the 15 sits usually right where the middle Bollinger Band is. Okay, so you would have had the 5 crossing up through the middle Bollinger Band, the 5 crossing up through the 15. You would have had the candlestick staying above the 5 MA this entire run. Okay, now you're talking about when do I take profits? Okay, let's say you're in at 10. He hits 12. You're in on this day at 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, about 10 in 2 weeks. Okay, you're in at 10. He went to 12. You've got 1,000 shares. That's $2,000. Look at this doji here on high volume. A doji, tiny, tiny black body. Upper wick is a little bit shorter than the lower wick. It kind of looks like a Jesus cross, a Christian cross. Okay, when I see one of those, I get scared. Okay, but so far he hasn't closed below the 5. He hasn't had the CCI. There could have been the CCI sell signal when it started to downtick, but stochastics was going up. The MACD was going up. He might get some more because look at this. He's finally breaking above this area of resistance that was at about 1150. He's breaking out into blue sky territory. Now volume didn't pick up as much as I would hope to, kind of like it did here. So personally, you know, you've made $2,000 in 10 days. Take your profits because it's starting to look like, you know, the MACD is just starting to downtick ever so slightly. Everything else is looking pretty good. You could sell half your position here. Okay, lock in some profits. If he drops below the 5 MA on a closing basis, get out, because at that point the CCI will be giving the sell signal by crossing down through the plus 100 line. And stochastics will be breaking below this level of support and below 80. And the fast line will be crossing down through the slow line quite convincingly. Right now they're running together. You can't see it. Now the MACD is a lagging indicator sometimes. So your first get out is the high volume on the doji. Okay. Your second is the CCI breaking below this level of support. and of course the fast line of stochastics. So basically what you've got here is, let's start from the beginning. You got a stock that breaks through the middle Bollinger Band, runs to the upper, continues up. You sell because it's too vertical. You go ahead and short on the double top breakdown. He falls all the way through, down through the middle Bollinger Band to the lower Bollinger Band like he should. You get perfect buy signals. Okay? The MACD buy signal comes when he breaks back through, up through the middle Bollinger Band, but as usual, the CCI gives the buy signal early. Stochastics is right behind it. He goes to the upper Bollinger Band. This is too vertical, so he has to level off or pull back. Now this time he didn't pull back sharply like he did here, so you're looking for support at the middle Bollinger Band. You're looking for a bounce at the 0 line and the 50 of the CCI and the 50 line of stochastics. He rockets up again on increasing volume. Too vertical, needs another pullback. It's a little sharper this time. Okay, but he also finds support at the middle Bollinger Band. He finds support at the 0 line of the CCI and the 50 line of stochastics. Okay? Then he gets into trouble. Volume falls off dramatically. He comes down, touches the middle Bollinger Band, and fails right there that day, that big red candle. Okay? Now, at that exact moment, the CCI is breaking down through 0. Stochastics is breaking down through 50, and the MACD histogram is steadily down ticking, and the fast line is falling like a rock, and so is the slow line. So now you're going to go, okay, I'm going to pick the bottom here. Okay, do you buy at the first CCI uptick? You could. That's pretty vertical right there. Okay, there's all kinds of reversal candlesticks. That's a hammer, that big red one. 2 dojis in a row. You know, okay, you're getting close. Already the MACD histogram is telling you it's going back up. So you wait for the initial buy signal of the CCI. When it drops below minus 100, crosses back up through it. Okay, that would have been on this day here. Okay, so you're in at 950. Okay, you suffer some painful days, but you're saying, oh, he's having trouble getting through the middle Bollinger Band. If he could just do that, then it would be perfect. Okay, there he is. He does it. So it's breaking up through the 0 line of the CCI. It's breaking up through the 50 line of stochastics, and you've got a beautiful triple MACD crossover. Okay, fast line up above slow line, histogram above 0. Okay, he's going to hit the upper Bollinger Band. You know it. As soon as he clears the middle Bollinger Band, he's going to hit the upper one. Oh, there's a hammer. Oh, that's a negative candlestick. Do I take profits? Well, no. Where's the volume? No. Where's the sell signal? No. Why is the stochastic still going up? Why is the MACD histogram still going up? Okay, don't take profits. Hope for a run. Now, volume should have been increasing on that run. It's a little spooky it didn't, because that was quite a move from $9.50 to $12. Usually it's best if volume increases on a huge move up like that in 10 days. Okay? And anyway, here at the end, that's not huge volume. It'll probably come the day he breaks below the 5 MA, which isn't shown. It'd probably be right in this area here. Okay? So basically, I'd be taking profits. I'd say, okay, even if I waited to buy just on the candlesticks closing above the middle Bollinger Band at 10, it still had, you know, it still had room to move. And then you would have stayed in because you never closed below the 5 MA. Okay? So this is another perfect chart. Really vertical. Straight up through it. A little hesitation there. Straight down through it. Straight down through the middle Bollinger Band. Straight down through 0 of the CCI. Straight down through 50. You know, sell signal. Right at the moment he breaks down through 50 and down through 0. Okay. See, that's why the MACD histogram is such a lagging indicator, because it deals with more or less the middle Bollinger Band area. That's where you're going to be getting your signals. When you get the beautiful triple buy signal here on the MACD, he is guaranteed to be breaking up through 50 and up through 0. Okay? It's just like clockwork. Here he is breaking up through the middle Bollinger Band, breaking up through 0, breaking up through 50, the buy signal exactly at the time he's breaking up through the middle Bollinger Band. So that's what I'm trying to tell you. If it goes up through the middle Bollinger Band, it will probably hit the upper Bollinger Band. Then you wait for the 5 MA sell signal. Okay? If it breaks down through the middle Bollinger Band, it will head to the lower Bollinger Band. Then to cover, you're waiting for the first, if you went short, you're waiting for the first uptick of the CCI. Then if you want to buy to go long again, you wait for the actual buy signal. When he hits the middle Bollinger Band, you are getting ready to bail out if he turns back at the 0 line of the CCI and goes up on stochastics, hits around the 50 area and gets turned back. But since he cleared it, you're almost guaranteed that it will go all the way to the upper Bollinger Band, and sometimes a little more. Now the 5 MA would have been right in this zone. Okay? So you could have gotten out there. You would have gotten back in at the same price as soon as the CCI bounced off of 0 and stochastics bounced up off of 50. Okay, so here he's bouncing. Is he going to bounce again? A beautiful Bollinger Band pinch. When the Bollinger Bands pinch together like that, that means a big move one way or another is about to happen. It doesn't say which way the move will be. It just says watch out because a big move's about to happen. See, the Bollinger Bands pinched right here. Not as tightly, but they still came together quite closely here. Okay, and there's the big move right after it. Okay, so if he had supported the middle Bollinger Bands once, there's usually a good chance it will do it again, but not 3 times. It'll usually do it twice. That goes into Elliott wave theory, where you have 5 waves to every run. Okay, here's 1, 2, 3, 4, 5, and then it's over. Okay, now wave 5, wave 3 is usually the biggest, but in this case, wave 1 was. Wave 1 up, wave 2 down, wave 3 up, wave 4 down, wave 5 up. It should have gotten a little higher, but it did break above that, so that's all that counts. Okay, so 5 waves up, here comes 5 waves down. 1 wave down, 2, 3, okay, then we start our new uptrend. 1 wave up. There wasn't 5 waves down there, but I don't want to confuse you with Elliott wave theory. And, Anyway, I think I've covered this chart pretty well. I think you'll get the idea. Oh, and this little M right here, that's called what I call a double top, an M, where it's shaped like an M. Okay, when it breaks below the middle point of the M, it's over. Okay, same thing here. So what I'm saying is, there's your M shape. When it breaks below that level of support, the M will break down. It's bearish, and that kind of signals to you that the stochastics is going to break below 50 and that the CCI is finally going to break below 0 as the candlesticks break below the middle Bollinger Band. Okay, so this is another perfect chart. I put this one on my watch list. It's a great mover, from 650 to 850, back down to 650 to 950. Nice bounce from 9 to 11. A little pullback. Nice bounce from 1050 to 1150. Then you get back here. He's back at $9 all the way to 12 in less than 3 weeks. This is a great one. His volume isn't quite as good as I would normally demand for one of my stocks, but when you see this kind of great movement, he's averaging 500,000. Some of these other days he's got 2 million, million and a half. There's his millions. So it's good that volume increases as he goes up most of the time. Okay, volume increases as he goes up. So this is a good one to play. Just because he doesn't have 1 million shares, his extreme volatility makes up for lack of volume. I mean, from 650 to 950, that looks like in 3 weeks. There's 5 days to every week, so 15 days. If you count 15 days, that's if you buy just 1,000 shares at 650. 3 weeks later, you've got 950. That's $3,000 in 3 weeks, $1,000 a week. That's a good deal. He's a good mover. I like him. Probably be talking about him more. The only thing that shocks me is that this move didn't have any volume behind it until that day where you had the real big tall candlestick, okay, and way outside of the upper Bollinger Band. So the only thing he can do when he gets up like that is run sideways or drop back. Usually candlesticks cannot survive more than 3 days or 3 periods. If it's a 5-minute chart, if it's a weekly chart, a daily chart, a monthly chart, candlesticks cannot survive above the upper Bollinger Band for more than a few periods, 3 to 5 at the most. Over here, look, he was outside. He closed outside 1, 2, 3 days, and what did he do? He pulled back. The next day, he was back inside. Okay, this one he never got above. He never closed above the upper Bollinger Band. But look, here's another one. Huge white candle, closed outside. The second day he closed outside. The third day he closed outside. The fourth day is questionable. It looks like it might have closed outside, but then he had to either run sideways or pull back to get back within the upper Bollinger Band. And the same holds true for the lower Bollinger Band. It's like a fish jumping out of water. He can't breathe up here. So eventually he's going to have to fall back into the water, which is the blue line, the upper Bollinger Band. So this is a beauty. CCO, Clear Channel Outdoor Holdings Incorporated. Put this one on your radar screen. It moves really well. I like it a lot. Just because it doesn't have my million shares a day every day, average volume, is no reason to turn your back on this one. Okay? So study this chart, folks. I want to wish you all happy trading from the Zigzag Man.